Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, good morning.
Hi, morning.
Hi, good morning. What an action-packed week. It started with the budget, then the India-US trade deal, now the tech wreck, and it ends with the RBI policy on Friday. But the GIFT Nifty is flat, despite the sell-off that is expected in the IT name. So that's a good sign.
Well, that's right. It's feeling like such a long week, right? We've still got 3 full sessions to go.
We're just midway.
Midway. And Prashant's had a longer one because he's done an all-nighter as well out here. So pull through, Prashant.
It just feels like it should be like a Thursday or a Friday. Not a Wednesday. It doesn't feel like a Wednesday.
Wednesday morning. 3 more sessions to go.
Okay, let's just take it from the top, right, in terms of what you need to know as we begin this new session. And there's always something new. And the new thing, of course, was this massive, big sell-off in, IT stocks in the US. And that's the, the screen on your the screen which tells you the story. This is all US-listed companies: Globant, Accenture, 12%, 9.5%, Cognizant 10%, EPAM down 13%. And by the way, it's not as if these stocks bounced. The sell-off started in Europe first, spread through to the US. And I looked at prices at about 10 o'clock, 10:30 last night. And then I looked at prices. These are the closing prices. The closing prices are at the lows or even lower than they were at about 10 o'clock. Gartner was down about 21. Gartner, I think, came up a little bit. The only one which was up about 3%, but 21% fall. And the ADRs, right? Wipro down. The ADRs did recover 5%, and Infosys about 5.5%, but not by much. The reason, if you're thinking about what has happened, is that Anthropic, which is one of the top 3 AI companies in the US, has introduced a range of plugins. I mean, let me put it simply, plugins. The basic problem which used to be the case is that general AI assistants were not very well suited to be integrated into companies and the company workflow, etc. So Anthropic is trying to solve for it, and they're introducing these AI. I mean, the AI agents were there, but these are like plugins which can be integrated. The integration part is crucial into enterprise workflow, etc. So this is across a range of functions: sales, marketing, legal, etc., and whatnot. And that, I think, spooked investors in IT services firms, saying that, well, are these very low-cost AI agents now, easier integration, going to eat into the revenue pool for IT services companies? And that's essentially what happened. Now, the IT stocks, and the data is, I think, about 11%, right? IT stocks weight in the Nifty is around 11, 12, 13%. It's been in that range for the last 1.5 years or so. So it's not massive in that sense, the weight. And can it really dampen sentiment on the Nifty? Yes. But you've got single stocks in the Nifty with that much weight now. But it's a sentiment thing as well. So keep an eye out with regards to IT services companies. As we start up, there will be a reaction. Now, NASDAQ, it's not as if global markets were sort of higher, but of course it was a reaction function. The reason NASDAQ was down 1.5% is exactly because you had all these companies which also sold off. So, they were pressuring the NASDAQ, and the index showed up with a 1.5% cut. S&P was down about 1%. I was saying this earlier as well. Apple failed to make a move on the upside despite strong results. And something similar happened with, this new company, Palantir, right? Palantir reported numbers. Numbers are like a blowout, and the stock went up 5%. So you have to consider whether global markets themselves, overall, especially in the US, because US has been the leader, clear leader, are starting to look a little weighty. And if that is the case, and on the way up, we did not participate. So on the way down, if there is a leg down in global markets, maybe we will fall less. So relative outperformance, I think, will be there. But you've got to be prepared for something. I mean, a bit of a shakeout, pullback. We've seen occasionally those happen, even as growth looks pretty strong. Now, precious metals have all bounced. You've got gold, which was up 6%. You've got silver, which was up about 7% or so. And this is a bounce. Many are still not convinced. And there are serious investors who feel that, well, this is one of those suckers rally which will get everyone in, and then you see another leg down. But this is a space worth closely watching. But for now, we've got a bounce. And this morning in Asia, prices are higher again. Dollar index was down about 0.25%. You've got oil prices which have moved up to about 68, but there were 70. They pulled back, and now we're at about $68 or so. Now, I'll just wrap up the India session, right? So there was buying, large buying. FPI has bought about 5,000 crores worth of stocks in cash market, and they covered about 40,000 contracts in terms of their short positions and index futures. I'm not looking at options, but just the index contracts. And they're still short, about roughly 1.6 odd lakh sort of contracts. So, yeah, the short positioning is large. The covering has been pretty meaningful as well. The question is, will there be a couple of days more of follow-through? I think it's possible we have some more follow-through, notwithstanding the IT news flow. But I just want to say one thing, and this is very, it's easier to see. You just look at the Nifty candle from yesterday, right? We had a very, very large open, 1,200 points higher. The market sold off, and we ended with about 600, 650 odd points in gains. So we got a big move on a big news day, which was unexpected, but we couldn't sort of hold on to gains. And I think that is perhaps a bit of a concern worth watching out as well. Maybe during the course of the day yesterday, there were doubts about delay and whether, whether we know all the information, whether there'll be some walk back, etc., etc. None of that has happened, so that's good. Mood certainly has changed across the board for the better. The levels for the Nifty, I mean, of course, 26,373 is the high. And that, of course, is the resistance. It's about 70, 80 points away from where we left off yesterday. And support, there was a big gap, right, between day before yesterday and yesterday's open. That gap area of about 200 points, that's the support zone. 25,450 to about 25,640 or so. GIFT Nifty comes up on your screen, gives you a quick sense of how we're likely to start. We'll pick it up from there. 17 odd points lower is the start on the GIFT Nifty. Nigel.
Well, you remember many years ago, right? There was that song, Baby Come Back. It seems yesterday we were singing that song because the FIs, they came back, and they came back actually after a while. Big cash market buying is what we saw, and that, in fact, is something that was missing. So 5,000 crores in a single trading session, I'll tell you what. The bulls will be very, very happy to see them come and participate with nearly around 5,000 crores. So that's pretty good news in terms of the flows that we saw. Well, the number actually, the FI buy number is the highest that we have seen in the last 3 months. So clearly very, very encouraging signs. Besides that, when you looked at the live data yesterday, both on the Nifty open interest as well as the Nifty Bank open interest, it gave you a sense that there is a short covering bounce that's playing out. Because the open interest was lower, both the indices were higher, and the premium on the Nifty futures as well moved up. That gave you a sense that the shorts were covering out and there was fresh long addition. And that's precisely what happened. Just take a look at the FI data. From being very, very aggressively net short, they came back yesterday. They've covered shorts both on the index as well as on the stock futures, as you can see. And they've added some counter long positions as well. So there was a massive, massive short covering bounce that we saw. Keep in mind, the FI short positions are still at around 83%, which is telling you they are net short, but that's far lower than the 92% odd we saw just a few trading sessions ago. The FIs, they have been covering shorts. If you just pull up the last 3 trading sessions, you'll see the FI short positions, it's come down. At peak, it was around 2.2 lakh contracts. That, I think, was on January 23rd. But even the last few days, the FI short contracts, well, they have come down by close to around 45,000 contracts. But the clients that were long, they are gradually going ahead, and they have unwound some long positions as well. So that, that mix actually you like with the FI short and the clients long. But now, in fact, they're relatively less short on the index, though there's still a lot of short covering actually that could play out. Moving to the options data, then the 26,000 call, well, there was clear signs of writing that we saw in yesterday's trading session. However, the 25,500 put, that continues to see some writing, which gives you some hope that the lower levels actually will get defended. So let's get the Nifty levels up for you on the screen. Support comes in at around the 20 as well as the 200 DMA. So the downside levels are very, very important in terms of this range not getting broken out on the downside. However, yesterday's high, the way it got rejected in yesterday's trading session is telling you that the bears would like to defend this high. Remember, Rima just spoke about the tech, the tech trouble that we could have today. So the IT stocks are going to be under pressure. Who can bat for the bulls? I'll be looking at 2 indices. One is the Nifty Bank, and I'm calling Reliance Industries as good as an index because it has 10% weightage on the Nifty. So we'll keep an eye out on both these two. They'll have to offset what the Nifty IT index will do. But I think this market sentiment has changed. So that's why, in fact, till that 20 and the 200 DMA is defended on the downside, you'll want to believe that we have some unfinished business at higher levels. But good going, guys. It's been a while since we saw that kind of FI buying as well as the shots getting squeezed out.
All right, let's get to the equity calls then. It's Surendra Goyal of Citi who says that Q3 results have been largely in line with expectations with an EBITDA growth of 9%. He says at the EBITDA, we've seen largely in line across most of the sectors, barring industrials and healthcare, where there is a significant beat, or utilities and financials, where there are modest misses. India's macro sentiment, he says, is improving tangibly. Major trade deals with EU, US, GST cuts, labour code reforms, manufacturing infrastructure-focused budget announcement, and lower pace of fiscal consolidation versus recent years in the backdrop of low inflation and a 125 basis points cumulative policy cuts. Recent INR depreciation, bond yield increases are areas of concern, but with recent trade deals, some of those should ease. Earnings are on a better footing with recent trends improving. Bottom up, our analysts highlight growth optimism across financials, autos, select industrials, and stable consumer. All right, let's move on and talk about the big rout that we had in global technology names. It spared literally no one, whether it's a Salesforce, whether it's a Gartner down, even across European markets, and the Indian ADRs too saw a very large slump of about 4.5–5%. Moshe Khatri, Managing Director, FinTech, Tech-Enabled Services, Investment Banking at Wedbush Securities, is here with us on the show. Arvind Sanger, Managing Partner, Geosphere Capital Management, also joining in. Gentlemen, thank you very much for joining in. Arvind, let me begin with you. Your first initial read on the tech sell-off. Is it just because valuations had run up so much, there was so much hype surrounding AI that some of the froth got taken off? Or what we've seen from Anthropic's Claude plugins, the new developments, the new updates, is actually going to put many of the services software models at risk, and therefore there is a real downside earnings pressure, and valuations rightly need to be corrected?
Well, the SaaS companies in the US have been for sale for the last several weeks and are coming close to the April last year, lows when we had that major correction in the overall market during Trump's Liberation Day. So they're almost back at those levels. They're reporting good earnings and the stocks are selling off. So this is not about current earnings. This is about concern about future growth, future value. And so finally, I think people have now started worrying about different segments, and IT services, the latest ones to get this concern, because the SaaS companies are going to see, disintermediation by AI and by AI agents and by AI software. Then at some point, people are realizing that, even the software services companies are going to suffer in this same issue of can agents do the work and how much will be the value of IT services companies in that new, if that's the new world we're moving on into. And again, this may not be a one-year call, but this is a 2, 3, 4 year. There's real headwinds emerging that could be very meaningful.
So today's developments that came over the last few days largely targets the SaaS companies, ServiceNow, Salesforce. But the fear is that in the future, with the way tech is developing, it will hurt even the Indian IT outsourcing companies. Is that the correct way to look at it? Right now, there's no risk to IT services. Today's revenues don't shrink. Moshe, you want to come in? And yeah, go ahead, Arvind.
Yeah.
And
Moshe, no, go ahead, Moshe.
Sure. So it wasn't only Anthropic, it was also Gartner that reported numbers this morning, and they took numbers down for calendar 26. So maybe that's more related to the tech-enabled services kind of sector. But look, Rima, we've been talking about the cannibalization and the disruption of AI for about 2 years now. Ultimately, the proof's going to be in the numbers. I just want to, factually, if you look at most companies reporting in the past few weeks, they've done better than expected. Guidance looked better than expected. So I don't know. I think we've been talking about for 2 years. The disruption has been going on. If we actually get to a better trajectory in terms of revenue growth for this space, I think that'll be, and we should be in an okay shape. The volatility is just insane, and I don't know if that necessarily reflects fundamentals at this point. That's my point of view here.
Yeah. Okay. So, gentlemen, morning, Moshe and Arvind. So let me play the devil's advocate just to quit. I've got a couple of questions. So Anthropic is coming up with a large fundraise round. I remember Ken Griffin at Davos from Citadel saying that all these companies have raised hundreds of billions of dollars, and that's one view, and they've got to promise the moon to change the world. Otherwise, they don't get to keep the money. You think there is that element as well? a bit of an oversell? A quick word, Arvind.
I'm not so sure. Anthropic's revenues grew tenfold in the last 12 months. And from what I've read recently, they're talking about another 5 to 10-fold increase. And it's not from small numbers, from 10 billion going to 50 billion. So these are not small numbers anymore. And they're still growing at a dramatic pace. So I don't think Anthropic is the one that is overpromising. I think the thing we have to worry about is, are there going to be some of the legacy companies that are going to be losers in this? And clearly, Anthropic is introducing more and more capabilities that are causing concerns about future growth, not about current growth, but in the next year, 2 years. I mean, just take the Indian IT services companies. They're trading at 20 times earnings for 7-8% earnings growth. And what happens if that earnings growth disappears in a couple of years? So, while I agree with Moshe that right now the earnings are fine, but the pace at which I believe that AI is developing, I think there's a real concern that disruption is around the corner. Now, maybe it takes a little longer than people expect, but the fact is it's a matter of when, not if.
Moshe, the general understanding here in India, I can tell you amongst investors, right, is that Indian IT services companies are going to be indispensable in integrating AI into enterprise workflow, etc. I think what was different last night, and perhaps is essentially because it's not general assistants trying to do everything, right? These are specialized plug-in tools for a variety of functions. So is that thesis that Indian IT services companies perhaps are not the inventors and they don't have the foundational models, but they will adapt and help global enterprises, integrate this system, these AI tools into their workflow? Is that thesis correct or flawed? Or is that thesis at risk? Moshe.
Two things. One, I do agree with this thesis, but before that, going back to your question about the bubble and overpromising, we did see throughout calendar 25 that I would say a big chunk of those AI initiatives really missed their target. So the real question here is ultimately, what's the ROI on all that spending? So we're yet to get there. So I'll just leave it here. This is kind of one argument that I would kind of leave it here. The second thing regarding your thesis, we do believe that there's going to be a spending cycle that focuses on integration, on data. In our view, the sector is very well positioned from the infrastructure side of AI, massaging the data, preparing it to basically to get fed into those accelerators. So we do feel that there's a very important role for the sector to fill in. But it's going to take some time until those projects really gain traction and gain critical mass.
Moshe, your view, just to be clear, is that there is, simply put, I know I'm reducing it to a binary, but the sell-off is a little overdone. Is that what I'm just trying to get that out of the way.
I think the sell-off is overdone, especially given what we've seen in the past few weeks in terms of the earnings and in terms of some of the initiatives that companies are actually going through in terms of reskilling and in terms of repositioning their models. Absolutely.
Moshe, any conversation with investors regarding the Indian IT services companies? Because here, it's not that earnings are beating expectations, like we've seen in the case of global tech majors. So what about the sell-off that we've seen, the underperformance of Indian IT companies?
The underperformance continues to be a function of sentiment. And the sentiment has been negative for 2 years, Rima. I don't think that's changed. And that's why I said the focus will be on guidance for the year. Calendar 26, fiscal 27 for some of the other companies. This is really going to be the proof, and the proof whether these guys are doing better or not. And from what we're seeing, it seems that the next 12 months will probably be better than the last 12 months.
Yeah. Arvind, you've got a view on global markets. Are they? We've seen these pullbacks. All of them have been short-lived. Do you think it's possible we get one more of those?
Well, I think the broader market, today was just a modest sell-off, right? It wasn't anything dramatic. So I think for the broader market, things are still going okay. I think there isn't any cataclysmic or any major concern. There was a little bit of a concern about whether there's something going on with Iran There was a drone shot down. There were some minor concerns. I don't think the broader market has any smoking gun negative thesis out there. I think, yes, the leadership has changed. So you're seeing, the Russell 2000 outperform NASDAQ. Could that continue for some time? You're seeing the metals and resources start to do well as people are realizing that all this AI spending is going to require a huge amount of resource, usage, whether it's metals or it's energy or what have you. So I think just because the leadership may be changing a little bit doesn't mean that the market is in trouble, but it's just that software has become, or the whole Mag 7 has become such a poster child for people assuming that that's where the market goes. The reality is the equal weighted S&P or the Russell 2000 are actually doing fine.
Well, it's a debate we'll keep having, Arvind, but thank you so much for coming back on after our midnight chat the other day. Good to speak with you. Thank you. Appreciate it. Moshe, it's always a pleasure to speak with you, and we'll request you to come back as we track how this story progresses. But good to get a wide range of opinion on this one. We'll take a quick commercial break here. Let me just quickly run you through the stuff which is coming up here over the next 2.5 hours or so. So 8:35, the management of Lloyd's Metal joins in to discuss the third quarter numbers. 9 o'clock, we'll have IT once again, but very much Indian focus. Sandeep Agarwal of Civilo Investment is going to be speaking with us with that view. 9:20, Vinny Samre of DSP Mutual Fund is a market master of the day. 9:30, Bernstein's Venugopal Garre talks to us about the trade deal. He's written an interesting note there. 9:50, we put the spotlight on Hyundai's earnings and speak with the management. Tarun Garg there. Towards the end of the program, Lata in conversation on the CNBC-TV18 Citizens MPC in front of the RBI policy decision on Friday.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. For the time being, I'm running through the list. Pidilite, Aditya Birla Capital, Mankind Pharma, Lloyd's Metal, Sheela Foam, V2 Retail, and Restaurant Brands Asia. They'll all be reacting to positive news flow, while tech stocks will get hit. Bajaj Finance and Bharat Coking Coal as well could open up in the red. Take that break, come back, we get into further detail on all of these names. Welcome back. Let's get straight to all the stocks that we're tracking for you. Our research team comes up on the screen. They're joining in with CNBC-TV18's top list of stocks for the day. Rima, you'll take center stage. Well, just revise the news.
Well, just to refresh the kind of tech wreck that we had across US markets and European markets overnight, just look at that. You had legal stocks because Claude came out with a legal update, Anthropic's Claude, and therefore you had names, like there's a company called Relex, which underperformed. LegalZoom was under pressure. Reuters was down 15.5%. Even SaaS companies like ServiceNow, Salesforce had a decline of nearly 7-8%. And names like a PayPal, Gartner, FactSet, Morningstar, all down between 10 and 20%. So deep in the red for these companies. And the Indian IT companies were not spared. ADRs of Infosys, Wipro down 5%. Accenture and Cognizant, which are seen as proxies for the Indian IT services companies, also sold off close to about 10-odd%. And the fear is that is the outsourcing model going to be at risk eventually? If not today, but maybe down the line. So keep your eye on IT.
All right, so tech will be under pressure. We'll be looking at some of the banking and financials names to bat for the bulls. However, Bajaj Finance, I believe, is not on that list. Gaurav, the numbers a little bit weakish.
Well, yes, if you look at Bajaj Finance, there are two things that we need to understand first. First is that Bajaj Housing Finance is a company, subsidiary company, where Bajaj Finance sold its stake and they gained around 1,400 crores. Along with that, in this quarter, they have also created accelerated provisions worth ECL, worth 1,400 crores. Now, this 1,420 crores worth of gain is not in the PNL because it is still the holding company for Bajaj Finance. And that is the reason, if you look at the profit number, that has declined sharply. So let's look at the numbers first. Net interest income and PPOP both increased by 20%, but because the provisions were higher and it was not offset by the gains, if you look at profit, that declined by 6% and it was 20% below the street's expectation. Now, this was a weakness in the result. Apart from that, if you look at ratios, now definitely credit costs that increased, but if we adjust for this one-off impact, the credit cost was actually in line with the street's expectation. Now, going ahead, what happened is that even the management commentary, it wasn't that encouraging to say in terms of the ECL provision specifically, because what they said is that they wanted to ensure the balance sheet and P&L to be shock-proof, and at the same time, one of the reasons why they took provisions accelerated is because of the customer leverage which is rising. That is something which can hurt the stock, and that is the reason why going with red in Bajaj Finance today.
Okay, thanks very much for that. And this is the story we'll come back to because it's important for the NBFC space as such. Pidilite is the next one we're going to tackle. Mangalam is here with details. Mangalam, morning.
Good morning. So consistently good numbers coming in from Pidilite. Here's a company that, consistently delivers double-digit revenue growth, 12% EBITDA growth and 12% net profit growth. That's what happened in the third quarter as well. And that's what the street was expecting too. The revenue was over 3,700 crores. The street was expecting a similar number. EBITDA at 894 crores. The street was working with a number of 890 crores. And the net profit as well, 624 crores. The street was working with a number of over 600 crores as well. Overall volume growth at 9%. The street was working with a range of 8 to 10%. This time around, the positive is that it's been led by the consumer business, where the volume growth has been near 10% versus expectations of 7 to 8%, whereas B2B volume growth has been slightly shy of expectations. And the company attributes this to lower exports of industrial products, which I believe will improve once the US, there is some certainty around the US-India trade deal. So all these factors point towards green for Pidilite.
Right, thanks very much, Mangalam, for that. Let's move on to AB Capital now. Gaurav?
Well, SAB Capital, the numbers are actually good. Net interest income and PPOP both grew almost by 22%, while profit increased almost by 28% on a year-on-year basis in terms of their NBFC business. Apart from that, if you look at ROAs as well, they have expanded, and now management says that the ROAs will be in the tune of 2.5% in the next 4 to 5 quarters, which leaves another 20 to 30 basis point of further headroom for ROAs. In terms of their NBFC AUM, that also increased almost by 24%. Now let's move on to other businesses. Housing finance. Now this was in focus because we recently saw the deal happening. And if you look at AUM growth, there also it remained very healthy at around 48% with ROAs of around 1.96%, and company also anticipating ROAs to go even higher in this segment as well. Looking into AMC business, if you look at the growth, 11% growth is what they have delivered, and they are also saying that the fundraising is underway because of one of the funds which they have been actively looking at. So all in all, a very good set of number from the company. Commentary remains positive, so we may see some positive uptick in this counter today.
Thank you very much for that. Ekta, how did Mankind Pharma's numbers look?
Well, in line for Mankind, so revenue was up around 11.5%. Margins came in at around 25.8%, but the profit was a little below expectations. Domestic business was up 11%, which is basically the bulk of their business. Within that, the consumer health business, which is a part of the domestic business, was up around 5.2%. It was down 10.2% Q-on-Q, and exports were up around 14.1%. So both the domestic business as well as exports did well. Overall, an in-line quarter for Mankind.
Okay, all right. Ekta, thanks a lot for that. Well, I'm tracking two companies. One is Lloyds Metals and Bharat Coking Coal. Lloyd Metal, actually, the numbers look quite good. They enhance EC limits for iron ore, faster ramp-up of the pellet plant, and improve sponge iron volumes. All of them put together led to a surge in the top line. Margins as well improved because higher value-added products is what they're focusing on. Pellets, the commencement of the slurry pipeline as well has helped them report very, very robust margins. Now, the EBITDA numbers come at around 1,750 crore rupees. I recall a time when in the full year they were doing 1,500 crores. Now, on a quarterly run rate, they're doing this sort of a number. So it's looking quite good with margins at around 35%. The guidance should come up for you. They've been aggressive since they've got EC limits. The iron ore volumes will ramp up. Pellet as well will ramp up. And they'll be moving into a steel company as well. And we'll see glimpses of that in FY27. So that's a stock expect to open up in the green. That's already corrected 20% from the top. BCCL, that's the other one we're looking at, the newly listed company. It listed with a premium of more than 90%. The stock has come down since then, but the management actually had told us that things were soft in the past quarter, but they expect things to improve from here on. So we'll have to track how exactly that happens. For the past quarter, the offtake is down by close to 10%. Realizations is down close to 14%. That's why you're seeing the top line degrow, which has flown down further into all the other numbers. The receivables as well have gone up. So BCCL float is limited, but expect the stock to open up in the red. That said, let's go back to Mangalam. He's highlighting some more earnings. Mangalam, run us through the list.
A bunch of numbers and all of them green, Nigel. Let's start with Restaurant Brands Asia, basically the owners of Burger King India. Good performance coming in. 12% consolidated revenue growth. The EBITDA has actually grown by nearly 30%. Margin expansion. Losses have narrowed. And remember, this is just a reported loss because the company's cash profits are higher on account of higher depreciation. They report that loss. SSSG in India is at 4.5%. That's a positive. They've added nearly 67 stores. And the big trigger for them, obviously, during this quarter, where Everstone sold their stake. And there is a new change in their ownership. So these factors should play out in the positive for Restaurant Brands Asia. V2 Retail as well. Performance, solid performance coming in. 57% revenue growth, 55% EBITDA growth. Net profit nearly doubled, and the company's opened about 35 stores in this quarter. Reported SSSG for 2%, but if you account for the festive season shift, it's actually a near 12% SSSG growth that the company's reported. And they've also announced a board decision to split the stock from 1:10. And finally, Sheela Foam, the Kurlon acquisition, finally doing well for them. Overall revenue growth at 11%, EBITDA grew by about 30%, and the net profit on a very feeble base grew from 20 crores all the way up to 50 crores. So all these factors doing well. Mattress volume growth of 11%, foam segment grew by 20% for the company.
Thank you very much for that. And a lot more companies came out with numbers like Nazara Tech. You can keep watching that ticker. Kansai Nerolac profits went down by 82%. But for now, let's talk about gold, because gold is back above $5,000 per ounce. And lots of updates coming through in crude and copper. Manisha?
Oh, well, absolutely. Pardon me. I'll start with gold first, because 6% of gains in the overnight market. We are trading at around $5,050 an ounce. This is the biggest one-day gain that we've seen since 2008. And that's the kind of volatility that you're looking at in case of gold and silver, making records on the way down and on the way higher as well. Having said that, it really is about the geopolitics that the markets are keeping an eye on right now. So even as US and Iran are slated for a conversation on Friday, the US forces have downed an Iran drone in the Arabian Sea. There also are reports that Iranian vessels have challenged a US-flagged oil tanker transiting the Strait of Hormuz, and that really seems to be keeping not just the gold and silver prices in the positive, but the crude oil prices, which also gained nearly 4% in the overnight market, so much so that we are back above $68 a barrel for the Brent there. Also supporting the crude prices is the U.S. crude inventory declined by 11 million barrels. This is the biggest decline that we have seen coming from the month of June. And then there also are reports from OPEC Plus suggesting that the global oil demand will pick up from the month of March or April, and it would be in the first week of March that OPEC will decide on further output plan. So various statements, much anticipated, and then of course you have the Chinese Lunar New Year holidays coming in as well, and ahead of that there is some restocking in metals. That also seems to be quite supportive.
Manisha, we'll come back to you. Very interesting. Thank you very much for that. We take a break. We're back. Rajat Rajgaria of Motilal Oswal Equities is going to be with us on the trade deal and markets ahead. Stay tuned. Welcome back. Rajat Rajgaria is with us, MD and CEO at Motilal Oswal Institutional Equities. Rajat, good morning. Great to have you with us here. Rajat is someone who has the pulse of what foreigners are doing, what large investors are doing here in India. Rajat, and I want to ask you exactly that, because people are all, there's only one question. The mood's changed for the better. There is no slip or any walk back on what was announced with regards to India, US in the last 24 hours. There was some concern yesterday, but nothing. So all good. The question is there going to be follow-through over the next couple of days? And is the FII, the FPI, back in a durable way?
Yeah, hi, Prashant. I think very quick response. If you look at India, I think we were an outlierish underperformer last year and the first 30 days of this calendar year. I think this deal transforms that. We have a lot of catch-up to do in this whole global rally of last 15 months. This event is big enough to do that. You will see follow-up not just for a couple of days, but I think we believe the trend reversal has happened. You will see foreign flows being very strong. They sold $35 billion over the last 15 months. You will see a very large part of that money which will come back over the course of next few quarters.
$4 billion, Rajat, was sold just this year after the $30 billion last year, right? So how much, I know it's not an exact science, Rajat, but how much do you think in that sense comes back? And this is feedback you're getting. I know that you speak every day to some of the largest investors out there, and that's the feedback you're getting. People are ready to come back. Discretionary money.
Well, Prashant, if you look at the EPFR flows, the India funds have been receiving inflows every week for the last few weeks, but the market flows have been negative. I just think that a reallocation within the existing funds itself will be large. But more importantly, moving from the highest tariffed nation to the lowest tariff nation. Let the good news sink in, let corporates start planning it out, and you will start seeing some order announcements happening from the global companies to India, which had probably stopped over the course of last 1 year. This is very big news. It will play out slowly, but for surely.
Rajat, hi. So what will go up? What is likely to do better? Will it be the large liquid names, the ones where FIs can take large positions, HDFC, Reliance, some of these IT names? Or is this the time to look at mid-cap and small cap? Since there is such a discernible change in the sentiment, many of these small and mid-caps have been beaten out of shape.
Absolutely. You know, in your own channel, I think every day you get guests, someone who favors small caps, someone who favors large caps. We look at every stock on its own. I think 3 buckets of stocks you can think about. First, the very direct beneficiaries of this US tariff deal, but largely it will center around small caps. You can't put big money into that. I think second, big sectors which are second derivative plays. I would think lenders, financials are a very large segment of second derivative plays on this whole tariff deal. And I think third, the poor sentiment led to a lot of valuation correction in large mid-cap franchises. Some of these stocks are down 30, 40% from their highs. Maybe the highs were also not justified. But post this big correction, those third bucket of large mid-cap franchises becomes more attractive.
Got that. Rajat, you also have such a strong view and on the supply which is lined up, right? That's the other point. As soon as the market starts to look healthy, there is a ready supply book on the other side. So is it, and it's a very large pipeline. So very quickly it'll realign, right? Let's hit it now. What's your sense?
The pipeline is very large of IPOs, QIPs, secondary market blocks. And if markets go up, you will see a lot of these pipeline getting activated. Already in the last 2 days, I think you are seeing IPO launches with firm timelines being announced. I can already see 3 to 4 IPOs being firmly launched up for the next couple of weeks. A lot more are going to come. But, you know, the important thing is the markets will align both on supply and demand on this. You are not just going to see a frenzy activity. You will see good quality paper, reasonable prices, and maybe curbed sizes before you start seeing large-scale foreign flows. As I mentioned, the intensity of foreign flows will decide how big a pipeline will get built because FII flows would need liquidity, and for best is to match through a lot of the primary market supply.
Yeah. You know, you began by saying trend has changed for the better, right? I mean, it's so downside kind of now is protected, that 24,500 kind of levels, and upside, I mean, we'll have to see depending on supply and where that matching happens, Rajat. Is that a fair way to paraphrase what you said?
Yeah, I think downside is protected, but please note 3 more things. While we put a lot of focus on the budget in this government, you have been seeing budget announcements
through the course of the year, yes.
Reform announcements continuing throughout the year, right from the government to the RBI.
Absolutely.
A lot of other regulators. But they kind of got sidelined because of this tariff wars and the FII selling.
Yes.
Once you have clarity on these two, I think the intensity of stock reacting to good news will be a lot more today than what you saw in the prevailing 12 months. So I think, you know, if the markets keeps touching 26,000 nifty every 6 months, it's not the same valuation. We have been stuck in this range for last 15, 17 months. We will decisively break this if these trends persist.
Rajat, it's such a useful conversation, punchy, short conversation, and we'll have you back, request you back on soon again. Thank you very much for that perspective and what you're picking up here and now. Let's go across to our first corporate conversation. Najul, I think we have the Lloyd's management with us.
Well, that's right. We have Mr. Rajesh Gupta, the Managing Director at Lloyd's Metal and Energy, who joins us on the show. Hi, Mr. Gupta. It's been a while since you joined in on the show, so good to see you in. Numbers look quite good, and you've been moving from strength to strength. Let's get a couple of numbers out of the way, going by the kind of EBITDA you're delivering now on a quarterly run rate, which was actually what you were doing on an annual run rate earlier. Now you're guiding for iron ore production, I think, of around 25 million tons. Pellet production, you're talking about around 6 million tons. If I just extrapolate the EBITDA number from the EBITDA per ton that you're doing, Between these two, you could do around 7,500 crores of EBITDA in FY27.
Good morning, Nigel and CNBC team. Thank you for having me back. You have touched upon two of our products, pellets and iron ore. Iron ore would be around 26 million tons next year of production and around 27 to 28 million tons of sales next year because we would have a carryover stock from this year. Pellet would be around 7.5 million tons next year, with the second plant also being commissioned well in time. Our other products would include copper, which would achieve 10 to 12,000 tons next year. And Triveni itself, which would have a top line growth of around 15% to 20% overall, with volumes increasing in non-boiled iron ore by 40%, sorry.
Yeah.
In coal, NTPC coal by around 15%. And of course, the gold mine revenue would also start coming in.
Okay.
There would be some degrowth in Triveni in Indonesia and maybe in barite operations as well. So with all this, we expect very good bottom line. Maybe crossing what figure you just mentioned. But I wouldn't want to venture against that's a factor of so many other things apart from our performance.
Yeah. Mr. Gupta, just to focus on both those aspects, the production number we have got of both production and sales, and I just think there'll be some carryover both on pellets as well as on iron ore. Now, the EBITDA per ton that you're doing currently, it'll be more or less sustainable. Is that correct?
I would expect more, not lesser than that.
Exactly. So that means EBITDA of both these two segments itself will be around 7,500 crores mathematically. We'll get to that point in just a bit. What about the scalability of Triveni earth movers, and also the targets on Geo-Mysore gold mining MDO? That's another small part of the business, but that is scaling up as well. Could you tell us, I think you mentioned Triveni will grow 15%. On the EBITDA front, that could do around 1,800 to 2,000 crores next year, just this entity?
It would be around 2,800 to 3,000 crores because 15% growth on top line means exponential in bottom line in Triveni being a service business. And in terms of Geo-Mysore, which is our gold mine company in Andhra, that is now already started production. The MDO has been awarded to Triveni, and we expect a very good bottom line from that operations as well. The mine itself is already producing gold of around 50-60 kilos has been produced, and 600-700 kilos will be produced next year.
Okay, got it. Just to
the mine after maybe 30-40 years.
Okay, got it. You're at 62,000 crores of market capitalization, and the street wonders a company that's doing only 1,700 crores of EBITDA on a quarterly run rate, which is actually a big improvement. Now, going by you're saying that Triveni will do 2,800 crores of EBITDA next year, and if I put in there the iron ore as well as the pellet EBITDA, in FY27, the EBITDA number should be looking like 10 to 11,000 crores. Would there be a fair estimate as of now? Some analysts are factoring that in. That's why I just want to understand whether they are on the right path.
Nigel, our top line this year, 3 years back, is equal to our bottom line this year.
Correct. That we have, sir. But what about the path ahead?
And we hope to repeat this performance over the next 3 years. For the coming quarter and current year, I would rather not hazard a guess. That's more best left to the analysts. We are working in the company in management for decades, breaking up our performances and our operations over the next 3 years.
Yes.
And I just mentioned the target that we hope to achieve there.
Correct. So the analysts but are not very off when they're talking about 10 to 11,000 crores, right, of EBITDA, mathematically.
Everybody has the same kind of calculator, I'm sure.
Okay. All right. The copper business, you're looking at de-risking your business. You've gone ahead and bought 50% in an overseas entity. And I think you mentioned 10 to 15,000 tons. Now, mathematically, if I put that in, what could you do? I think the top line will be closer around 2,000 crores from that entity. So you could another 500 crores of EBITDA from that entity in the coming year?
Probably a little better, but yeah, in that...
500 to 700 crores of EBITDA. Would that be fair?
You are wanting to pin me down on projections. I don't want to do that.
Yeah.
But again, the mathematics is known to everybody.
Okay, we would have liked to ask you also about the deals with regard to what you'll have done with Tata Steel, but that discussion for another day. We appreciate you joining in. You've given us a fair bit of color. The outlook looks pretty positive going by what analysts are estimating. And it seems that you more or less, agree that those calculations are not very, very far off. All the best. And thanks a lot for joining in.
Thank you, sir. Thank you, sir.
Okay, well, time to slip into a short break. We'll come back and we'll have our technical experts, Mitesh as well as Sudarshan, are waiting for us. Welcome back. We have a terrific Tuesday yesterday, but what does Wednesday hold for us? Mitesh Thakkar, President, Retail Research at Bonanza Portfolio, and Sudarshan Sukhani, Proprietor of Technical Trends, join us on the show. Good morning, gentlemen. What do you do? Yesterday, a 600-point finish is what we had, but at one point of time, we were up close to 1,200 points. Mitesh, what are the levels you're looking at on the Nifty, and what would the trade be?
Good morning, Nigel. I would, want to prefer to start with the bank Nifty. See, the Nifty kind of opened near the earlier highs and tapered off and closed much lower than the highs. But the bank Nifty, and let me highlight this fact that the bank Nifty has tried to close above 60,100, 200 zones on 5 separate occasions in the last 4 months, and it's failed. And yesterday also, while it opened at highest ever levels, the closing was below 60,100, 200 zone. So I think, it's very close to those levels. I'll keep a close watch on the bank Nifty. In case the bank Nifty is showing strength to close beyond 60,200, I think that would be a fresh breakout. And then we can look at the Nifty trying to regain and retest levels of 26,000. In case the bank Nifty fails to do that, it could be a quiet day with, some intraday decline happening during the day, which could be a buying opportunity on both the indices.
Okay, got that. Sudarshan, what about you?
Yeah, good morning. Well, we had that big rally yesterday, big gap up. Shall we call it the father of all gap ups? But whatever it was, the market should now cool down. These gap ups, these large breakouts invariably lead to a period of consolidation. I would expect the Nifty to slowly come down to a support level, which is between 25,400 to 25,500. That's an approximate range. And that's the location where I would suggest buying. That may not happen today, but the idea is that we should see a slow slide to support levels.
We'll take a break. We'll come back with specific trades from both of you. Stay tuned, coming up in just a bit. Welcome back. 9 o'clock, and we are running at a market open 20 points lower on the Nifty, about 370. But this is, of course, the first couple of seconds of the pre-open. Things will settle. Let's get the trades out of the way. Mitesh and Sudarshan are with us. Gentlemen, morning. Mitesh, what do you have?
Prashant, the list of all buy-side trades, assuming that any intraday dips will be bought into. So a buy on Bajaj Finance with a stop at 949 for targets of 995. Bandhan Bank is also a buy. Keep your stop at 152. Look for targets of 162. A buy on Dixon Technologies on a mild decline, so around 10,950. Keep your stop below 10,600. Look for targets of around 11,500. And DMart is the final buy call. That's a buy with a stop below 37.49 for targets of 38.40.
Sudarshan, hi, good morning. Which stocks are you looking at for trade today?
Yeah, good morning. It's a buy on dips opportunity here also. Granules is a buy with a stop under 560. Jubilant Foods is a buying opportunity with a stop under 495. Indigo is a buy with a stop under 48.50. And LIC is a buy with a stop under 820. It's an all buy list, while the Nifty is expected to come down. That's what I think. there will be stocks which will be worth buying on any small dip.
Okay, all right. Well, gentlemen, thanks both of you. And I liked it, Sudarshan, what you call it, the father of all opens. But the point is the close was a bit kiddish, right? It was not very fatherish. We came off quite sharply. But hopefully, moods turned and prices will stay turned as well. Thank you both. And we'll talk again soon. Sandeep Agarwal is fund manager at Sovilo Investment Managers. Sandeep, good morning. Good to have you with us here. Big sell-off last night in IT services companies. Overdone or not?
Hi, good morning, Prashant, and thanks for having me on the show. So I think, as far as the sell-off which has happened, ex of Indian IT services, in my view, you will see consistently, the multiples for all those players will continue to come down, and there'll be a slow, what will happen is while earnings will not see immediate impact, but the multiples will keep on getting de-rated. And this is our view for last, more than a year. We continue to believe that, it is super hot. So we don't believe that they can sustain this kind of valuation and multiples. Although in case of Indian IT, we have slightly different view. We don't see that there'll be a sharp impact on the actual fundamental numbers immediately because we have most of the contracts which are long run 5-6 years. So
right, Sandeep, let me just, you started the thesis that P multiples will keep compressing is for that view is for IT services companies across Indian and otherwise.
Yes, absolutely. That is what my view is.
Okay, because you start by saying, well, X of IT services. Okay, but the actual impact may not be that large. Fundamentally, that impact, at least in the foreseeable future, in terms of earnings, etc.
So that is what I meant by ex-Indian IT services. So in ex-Indian IT services, the fundamental impact will also be quicker and sharp, and the multiples will also compress. But for Indian IT services, I don't see fundamentals will come down sharply quickly because we have long-run 6-7 year contracts. So every year you will have only 2-3% negative impact. So you have to go and find that new business. So, but yes, we are in a space where, low growth for a long time for large cap Indian IT companies is definitely going to be there.
Sandeep, just getting back to basics. Now, agentic AI is not new. So can you simply explain that what was it that Anthropic's Claude, the agent, what were the developments, the updates, which actually spooked the street this time to this extent?
So, I'm surprised, honestly, by the move because, this technology is not something new. It was always there. It has just been repackaged and launched. So, to that extent, now it is people are now seeing it as a threat while it was always there. It has been now given in a more user-friendly way, and that is the reason people are spooked. Also, remember that, the first impacts will be where there is a lot of data to refer to, so legal services and similar other services. So I don't know, whether that should seriously spook so much for the Indian IT services also, because we will have second line impact and not first line impact. So as I said earlier, also we are running 6-7 year contracts most of the cases. So you will have limited impact every year, but yes, we will be low growth for a long time. That definitely is there. So maybe multiples will derate over a period of time. But I don't see, this something new. This is just one day when it has happened. Let me put it this way. It was there for quite some time now.
Yeah. Got that. Sandeep, so what's the thing to do then now? I mean, I'll tell you, many sophisticated investors were of the view that maybe IT services sector is the sector of the year, dark horse, whatever you want to call it, because it's been ignored and shunned and etc. But you think it'll play out that way? And from an actionable standpoint, what should one do to protect and to make money?
So, Prashant, I will tell you what will happen in the sector now, where the stocks will be very tough to give a call. But let me tell you this, that, there are two fundamental changes which has happened. People are comparing this IT disruption also with any other past IT disruption, which is grossly wrong, in my opinion, because, this is the first disruption where efforts are going down by 20-25%. So definitely it is not like past disruption. You have to find that, compensate that 20-25% effort in future. Second, on the positive side, this disruption will be over a period of 5 years because our contracts are for 5 years. So whenever they get renewed, you reprice it. The efforts get reevaluated. So not sharp impact immediately, but long 4 or 5 years, we are 5-6% growth industry. Now, what multiple you want to assign for that industry, X of rupee benefit, is something which investors and the fund managers and the people who are managing the assets will have to decide. We are very clearly of the view that, the small caps will do better than mid cap and mid cap will do better than large cap. Having said so, we still don't believe that, any of these segments have a good peg ratio to invest right now. We have been very, very negative for last more than 12 months on the space. We continue to be so. I believe that, after 12 to 18 months, probably both, some correction in the price and some correction in the multiple will happen. And because of that, you may find some good opportunities in some of the spaces. But as of now, I don't see the sharp fall in fundamentals, but I do see that low growth for long term is what will happen.
What about ER&D companies, Sandeep? You were excited with their growth prospects, but KPIT numbers were not anything very exciting. What's the current view now on ER&D companies?
So, ER&D, I continue to believe that will do better than IT services. But as I have said earlier also that, they are obnoxiously priced. So even after the correction which these companies have gone through, I think they are very, very super priced, very, very overvalued. I would buy, even ER&D companies at maybe 15, 18 times forward earnings so that, I can make some money on that. I will not invest in any of the ER&D companies at the current level. So our view is very clear. The large names, 11, 12 times forward earnings and mid cap at 15, 18 times forward earnings is something which gives us some comfort to make money. Otherwise, we will wait for our turn for the right prices to be there.
Quick word, Fractal Analytics IPO opens next week. They're looking at a market capitalization of about 15,000 crore rupees. Now, this was a data analytics company, and just going by Anthropic's Claude developments overnight, that's the segment which stands to get disrupted. What is your view on Fractal?
So I won't comment on a specific company, but let me put it this way. There is very, very fast developments which are happening in the space, in the AI side and the analytics side. So, you can be a big beneficiary, so it can play out either way. So we generally will, we have a philosophy. We generally don't invest in loss-making companies and companies which are yet to turn profitable. So for us, it is not an investment space. And we will definitely watch it for next 4-6 quarters. If we get reasonable, better, it is fairly valued, we probably may be interested, but not at this level.
Okay, all right. Sandeep, thank you very much for that. Good speaking with you. Appreciate your time here on CNBC TV18. Well, I think that's a very useful conversation and framework to sort of listen to and have as you approach markets in this particular space right now. 9-10 calls. Sudarshan and Mitesh are back with us. Sudarshan, what do you have?
It's granules. Buy granules with a stop under 560.
Okay, granules is a buy. And what about you, Mitesh?
I'll go with the buy on Bandhan Bank.
Bandhan Bank is a buy. These IT companies, IT stocks, as you're seeing them open up in the pre-open, actually, the pre-open has ended. Anything, Mitesh?
So yesterday we had a call on Coforge. I think that's a stock which is bottoming out. That apart, I think, what I like is Tech Mahindra. That's one of the strongest stock in terms of performance and could do well if it starts getting past 1750 again.
Okay, all right. Coforge perhaps bottoming out. Tech Mahindra, the strong name in that pack. So that's the view. Mitesh, thank you very much and speak again soon. Bajaj Finance, want to revisit the numbers and the pain and asset quality. Gaurav, take it away.
Well, yes. But for Bajaj Finance, we need to understand two things. First is that they sold some stake in Bajaj Housing Finance worth 1,420 crores in this quarter. And at the same time, they also created accelerated ECL provisions worth 1,400 crores. Now, what is happening is that because Bajaj Housing Finance is still a part of consolidated Bajaj Finance, it is not considered in the P&L, the gains, I mean, they are considered in the net worth. And that is the reason, if you look at profit, the number actually looks lower than the street's expectation. So net interest income, PPOP, both remained in line, grew by 20%. But when it comes to profit, that declined by 5% on a year-on-year basis and 20% below the street's expectation. Now, what management is saying is that the ECL provisions, the accelerated ECL provisions that they have created is specifically to make sure that the balance sheet and P&L remains sound and shock-proof. And at the same time, they also said that one of the reasons why they have gone ahead with this accelerated provision is the customer leverage and the increased competition that they're seeing. Along with that, on the flip side, on the positive side, what they're saying is that despite this accelerated provisions, the credit cost in next year are going to be in the range of 165 to 175 basis point. Now, if you look at the overall outlook from management, at least in terms of growth, they say that the growth will be in the range of 22% versus the guidance that they have given up 22 to 23%. So again, for FY26, we may see the growth being at the lower end of the guidance, but going ahead, we may see some kind of increase in the growth. All in all, what is happening in Bajaj Finance is that given that the valuations are still higher than all the peers, above 5 times price to book, and we have already seen 6% rally in the stock, it is really important to see how investors take these comments as well as the accelerated ECL provision into consideration. But in terms of numbers, if we exclude that ECL number, the numbers were more or less in line with the street's expectation for for Bajaj Finance in this quarter.
Okay, thank you very much for that. We're watching for Exide this morning because Nomura has upgraded the stock to a buy. Their target price stands at 398. Q3 numbers were largely in line with expectations. So auto growth was healthy. Industrial, according to Nomura, will recover. But what they say is that Exide has corrected by nearly 20% in the last 3 months. So it's underperformed the Nifty, which has fallen by 3% in the similar period. And therefore, valuations after this correction have turned attractive. Now, about 3 months back, when they came out with their Q2 numbers, Nomura argued that the stock is trading at 13 times core EPS. Core EPS is excluding their holding in HDFC Life. Remember, they have about a 4% holding in HDFC Life. Even their lithium-ion cell capex. If you strip that out, stock 3 months back was trading at 13 times. Now, after the correction, it's trading at 10 times FY28. According to them, that's attractive. The EPS of this company is likely to go up by 17%, and therefore they've upgraded the stock to a buy with a target price at 398.
All right, absolutely. Rima, thank you very much for that. We'll, quickly recap things here for you. And the stocks that we covered since the morning. So on your screen now, Pidilite, Aditya Birla Capital. You've got, what else? Mankind, which is coming up with 1.6% gain. Lloyd Metal is up about 7%. We had the management with us earlier. Sheela Foam is coming up with gains as well. V2 Retail and Restaurant Brands Asia, the other names which are up there as well. Nifty IT Index is down 4%. And that's the sector we've highlighted and focused on from 8 o'clock this morning. So we've got a couple of seconds to go for market open, and we will take it from there. We'll look at the indices and the heat map, and then we'll get down to individual names on the big wall. What do we have? First rates, the bells gone off, and 120 points, 25,600. That's 140 odd points lower. The Nifty Bank is down about 80 points. Sensex is down about 500, and the mid-cap index is down about 500 as well. About 1% lower is what you have coming through. So, yeah, I mean, 1,000 stocks are higher, about 700 stocks are lower. That's the advanced decline ratio. So, broader market still more up than down, but this is a bit of a bite out of the big gains that we saw yesterday. The heat map, perhaps, before we do anything further. Okay, I don't think we have the heat map. So let's go across to Nigel now. He's on the wall with what's happening. Nigel, over to you.
Well, market's cooling down after the big run that we saw yesterday. So the Nifty should come up for you on the screen. Well, that's pulled back a little bit, close to around 70, 80 points. But I'll tell you what, the first tick actually it was down 150 points. The Nifty Bank, that's the one that's actually trying to bat for the bulls because the tech index, well, that's lost its way. Tech has got slammed in today's trading session. The Nifty Bank, well, that's taking onus on it and saying, let me bat for the bulls. Also pull up Reliance Industries because let's see what that one's doing. If in case we need to offset what the tech index is down, that's down close to around 2,200 points as we speak. Reliance Industries and the Nifty Bank, they'll have to do bulk of the heavy lifting. But keep an eye out on this number. This is the advances number at around 1,000 stocks. Well, by the end of today, I'll want to see more number of stocks advancing than declining. Yesterday, by the way, it was a bit of a record that we were at around 2,500 stocks that were advancing. Tech is getting knocked back, so all the frontline names should come up for you. Whether you look at Infosys, TCS, or even Tech Mahindra, all of them are lower in today's trading session. So they are seeing some selling pressure. Bajaj Finance, well, that stock has opened up more or less flattish the last time I checked. For the time being, I think let's pull that one up. I think it was marching the green. Now it's in fact down close to 1.3%. And Gaurav had highlighted that there were some concerns on that front. Stocks that went up yesterday, they are seeing some follow-through buying. So you have Gokul Das. That stock is building on those gains. Yesterday, 20%. Today, up another 10%. Kitex Garments as well. That's the other stock in there. That's up and about in today's trading session. So good move is what we're seeing on both these two names. Sheela Foam, the numbers look quite good. So a couple of good earnings reactions. Whether you're looking at Sheela Foam, whether you're looking at Lloyd's Metal, both of them are up close to around 7 to around 10%. I think Lloyd's Metal now is up 10%. Sheela Foam up close to around 15%. So good going out there. Add to the list V2 Retail as well. The numbers look quite good, 4% higher on that stock. But there are some losers as well. So you have BCCL. Remember, the stock listed at a premium of around 90% in comparison to its IPO price. However, a bit of a shocker now because from around 45 rupees on the day of listing, stocks come down to around 36, 37 rupees, but the float is very limited. JK Lakshmi Cement, the numbers look quite weak, particularly on the realizations. We require some clarity on that front. Stock already 20% down from the top. Now it's down close to around 4% as we speak. And Aarti Drugs as well from the broader markets. That's another stock that's down close to around 6.5%. DAM Capital is the other name that comes in there. with some losses. And since it's that sort of a day where you have a lot of stocks that are declining, DAM capital is down and latent view as well, seeing some selling pressure. But as we did that, that quick check on the markets, take a look at what's taking place. The Nifty, that when I started off was down close to around 100 points, that's fought its way back. And now, in fact, it's trading more or less flattish. The Nifty Bank, Reliance Industries, both those two big boys, they'll have to counter what the Nifty IT index is doing in today's trading session, because tech is under pressure. Prashant, back to you.
Yeah. Nigel, thank you very much for that. Vineet Sambre is with us, head of equities at DSP Mutual Fund. By the way, the Nifty IT index is down 5.5%. That's a very large fall coming through on that index. Almost 6% now gone. And we'll have all these names. We have persistent, but let's put 5, 6 of these top losers across the board at the bottom of the screen. Vineet, good morning. Great to have you with us here. Thank you very much for joining us. Just your view. Do you own this space? Are you market weight, underweight? And what's the view from here? The news, of course, is this Anthropic AI agents and in a plug-in form, which kind of helps in integrating with enterprise workflows in a much better way. And of course, stocks sold off last night. Accenture, Cognizant, EPAM, Globant, and we're seeing that here as well.
So good morning, and I think clearly these are very difficult times, and things change very quickly is what it looks like. But before I start, so let me say that we are broadly either equal weight or overweight in our IT sector across the portfolios, including my own portfolio. I think here the thought is that we have seen the commentaries from some of these companies globally, which has caused the panic. But I think before we react to this news, it is important to understand, from our companies that what exactly could be the earnings impact, if at all, from this development. And if the companies believe that eventually, while there is a deflationary impact overall. Because of the AI is very well known, but also in terms of the quantum of volumes of work which can grow because of the modernization of applications eventually, which has to happen, and how is that going to help our company? So maybe I'm biased because of the ownership, but I think it is important to get deeper into the analytics to understand how exactly the earnings are going to be impacted for the companies out here. And if there is a threat to the earnings in a big way, that's the cause of concern. Otherwise, some of this news also maybe creates more opportunities over the medium to long term period is what we are thinking as of now.
It's interesting, right? The Nifty IT index is down 5.5%, 6%, and the Nifty is still in the green. And perhaps one reason why it's being held up, of course, is also Reliance. If we can pull up Reliance, RIL's weight in the Nifty is what, guys? Mangalam, hi, morning.
Morning.
Is 10, 11%. 9-10%. So, and that's up 1%. And the Nifty IT stocks weight in the Nifty index is about 11%.
Yeah.
So
it's outweighing each other. In fact,
it's playing off. Let's just actually look at the what's moving the Nifty. I think that'll give you a sense of why, with that kind of a fall, the index is actually flat. It was actually higher a little bit. And I think it is a reliance to a large degree. We'll do that. Vineet, so markets, though, from here, how does the view change after the India-US deal? Sentiment is a little more upbeat. There's been no walk back, no slips in the last 24 hours from what was announced initially. So durable turn in sentiment, you think?
Yeah, clearly, I think this was one of the important events which actually turned the sentiments, most importantly from the foreign participants last year when we had this additional 25% tariff. Now, with this change, I think in the region, we become the most competitively placed as far as the tariffs are concerned. While there are nuances and conditions which have been put for this tariff to stay effective. But at the moment, it looks like the sentiments should turn. And more importantly, what was causing the panic, as we understand, is the growth is something which is lackluster from the earnings perspective, and the rupee was also in a constant kind of pressure, in a constant pressure. So I think from the sentiment perspective, if we have some kind of control on the rupee, I think that itself should be positive from the investors' perspective. And anyways, the results are coming out. I think the downgrades in general, they have sort of now, we have seen a downgrades season generally getting over. And as the earnings momentum maybe catches up over the next 1 or 2 quarters, we should see the markets also, picking up from there.
Okay, all right, Vinny, just hold on to that thought. Prashant, Reliance Industries has around 8.5% weight on the index. But besides Reliance Industries, you have a couple of other heavyweights. Bharti Airtel, well, that has close to around 4.5% weightage. That's up close to 100%. And Mahindra, that's in there with around 3% weightage. That's up close to 1.5%. So all those boys, they're saying there is trouble. Let's go in there and play a good knock today, and help the Nifty out, because the team requires a good innings. Reliance is doing the heavy lifting. You have the Nifty Bank as well. That's top of the pops. And, the middle order is batting around the top order. What do you think, Mangala?
I take that point, Nigel. The middle order is batting around the top order.
To back by
tail. I don't know which tail you're talking about, Arya. But, the good part from a bull standpoint is that this Claude-related decline that was there was a godsend for those who were waiting for a dip. Because yesterday you didn't get that opportunity. It was a 1,200-point up move that we saw immediately. And from there was understandable profit taking. We ended about 600 points higher. For those who wanted to enter after that sort of rally, they had to wait for a dip. And that dip came by and those guys lapped it up. The Nifty's moved higher, up around 30 points as we speak. And it will be very interesting to see how, the mid-cap index also does. Because while at an index level, it's been buoyed down by a lot of these mid-cap IT names, the broader markets tell you a completely different story. 1,600 stocks which are in the green for about 900 stocks which are in the red.
And Hormuz is on top of the game. He says that 5 IT stocks have lost 1.2 lakh crore in the first 5 minutes of trade. So that's the kind of market cap erosion we're seeing on some of these IT names. By the end of today, you'll want the IT index to end at least, higher than what it is starting off, down close to 5.5%. But let's get back to the chat.
Yeah, well, let's get back to the chat with Vineet. Vineet, you did say that, sentiment has been improved because of the announcement of at least a resolution for the India-US trade. There was the budget as well, where there were no obvious negatives from an economy standpoint, barring the hiccup that was there on the STT front. So sentiment is usually what drives the broader end of the market along with earnings. You say that earnings are, now beginning to, the downgrades are beginning to end. Sentiment is looking a lot better. Prices are still 30-40% off highs. You think that correction will be undone over the next 6 to 8 months? What is your sense, especially for someone like you who specializes in the mid and small cap names?
So I think clearly the valuations now are looking much better versus what we had maybe a year and a half back, where I think there was a lot of froth in terms of the valuations, which was also one of the big pushbacks as far as the investment is concerned. So now, from the perspective, I'm actually seeing that a lot of the segments, maybe capital goods, power equipment, all of these sectors have really seen meaningful correction, and maybe not exactly very attractive price points, but they are still palatable in some form or fashion. And now what is lacking is maybe a clear, signal of earnings directionally moving up. I think if that also, comes across, then I think we'll have the market's momentum again picking up. So my thought is that the valuations look pretty okay versus what it was maybe a year back. And in terms of the budget also, a big amount of change has been done outside the budget last year with the GST, income tax, interest rate. I mean, all those should sort of feed into the growth momentum eventually is my thought. And budget, like you mentioned, Mangalam, it has not been negative. So that itself is a big positive in my case. They have taken care of the capex across different sectors. So I think, it's a pragmatic one, I would say.
So what did you not buy earlier because it was expensive and are now buying because you think it is attractive? Is there anything new?
Yeah, so as I mentioned, I think the whole engineering and most importantly, the ancillary businesses which are linked to the power as a sector, because power has seen, demand has seen turnaround. And anyways, the investment momentum is sustaining out there and the stocks have seen correction. So I think that's one new segment beyond the others, what we anyways keep looking at, where we are actually trying to find ideas, because we had gone underweight in that category over the course of last 1 year. And that's where we are trying to look into.
All right. Hi, Vineet. Good to see you. And as always, Vineet, the last couple of days, luckily we got some good news from Mr. Trump, that we have got a deal going with him. The devil will be in the detail, but as of now, at least it's a positive. Stocks that took a sharp knock when the tariffs went to 50% were textiles as well as chemicals. What is the exposure you have to both these two spaces? And incremental money, will you be looking to allocate to either of these two?
So, Nigel, actually, see, I think we have a decent exposure, and I keep talking about chemicals, not so much textiles, but chemicals is something which we have an exposure into. In general, I think for that segment, I mean, this is a good news because it removes some of the barriers for them. But there's not a broad-based kind of a sector outlook changing with this event. I think this is, as I mentioned, a bit of a sentimental change. But I think from the other impact perspective, these are some sectors which also has large amount of labor being employed there, and that has ramifications on some of our other segments like banking and all. So I think from the overall perspective, that holds good. My outlook on chemical sector continue to remain positive because we are still in the low cycle. I don't see any of the matrices changing for positive in a big way right now, but because we are in a low cycle, it is okay to hold. Is my thought. And textiles, I think we don't own as much now. Earlier we used to own, but not looking at it to at the moment because of the change in the US tariff.
Okay, we'll leave it there. Thank you very much for joining us. And appreciate your time here as always, Vineet. See you soon.
Thank you so much.
Venugopal Garre is with us of Bernstein. Venu, welcome back. Thanks very much for joining us. We spoke pre-budget, not post-budget, but I think now we're speaking post-budget and post the India-US deal. After the EU deal, you wrote that very provocative note, mother of all deals, but for who? What's the view post the US deal? Yeah, go on, and then we'll come back to you. Go on. First thoughts.
Yeah. So firstly, on the in the EU deal versus US deal, I guess there is a bit of a difference, and part of it is because EU deal I felt was not relevant from a point of view of actual impact, because the average tariffs that are broadly applied on India from a point of view of Europe, our exports to the Europe is roughly around 3 to 4% range. While I look at top 15 products that we export to Europe, it's less than 3%, right? There are certain sectors probably you are at 9 or 10%, but I didn't really feel that going to 3 to 4% average tariff is a meaningful number. And number two, EU has a lot of FTAs and treaties and other things with different other countries. So what it means is that you're literally competing with a China or a Vietnam or a Bangladesh or any other country. So in that sense, incrementally didn't really seem like a game changer, or I would probably not call it as the mother of all deals by any measure. Now, India-US treaty, I guess we don't know the contours of it, as you know. All of it is just based on some broader social media communication. But the reality is that a 50% tariff on an average going down to 18% is a fairly meaningful change, and it brings us much closer to where ASEAN is in terms of broader trade tariffs. So at least to one extent, you're not being punitive. And more importantly, my broader philosophy has been that it is better to be closer to a developed country, which is a big consumer like a US, so that you don't really get damaged in the medium to long term, and probably also position yourself as a relevant alternative to China as a balancing power in Asia. Look, all of that is more from the long-term perspective, but I would probably still categorize an India-US thing slightly different from India-EU, broadly from that lens.
Got that. Venu, this one thing, right? This $500 billion number, many people are coming back with that. That, this is much bigger than the size of our bilateral trade. So then we are supposed to buy $500 billion from US? So how is this good news? Now, my pushback is it's just a number. Who's going to count $500 billion 5 years later? And this looks like for the domestic audience for President Trump there. So is that the right way to look at it?
See, these commitments typically tend to be multi-year commitments, right? So it's not like you're going to spending $500 billion.
It's 5 years, but even 5 years, India imports $150 billion of oil every year. Our imports are $41 billion from the US. So 500, even over 5 years, is too big. My point is, it is just a number. I mean, you see, and we've seen what's happened with South Korea and other countries, etc., right?
Right. See, I'll put it in a more simpler perspective. Look, I would not go to this perspective saying that it's just a number and probably nobody's going to count it. As long as Trump is there, he's going to count a lot of things. So what does it mean? It means that, look, if you're assuming your volume of exports to increase to the US, US would also expect the volume that they are selling to India to increase, right? Now, somewhere down the line, the one single measure to look at is the trade deficit or trade surplus. Right? So the India enjoys a trade surplus over the US, especially in the manufactured goods side. The point is that is a monitorable number, even if volumes increase. So if, for example, our trade surpluses increase with the US, then US will say, hey, what's the advantage of the treaty? You're actually benefiting from that perspective, right? So don't expect trade surpluses to increase materially from an India to US perspective. That's a way to look at it. Absolute volumes go up is a different argument altogether. It'll go up for imports as well, right? It is going to be an even balance treaty, so I don't think this is meant for, see, this is not like India is being isolated as a China plus one play, or saying that you are the only one and I'm going to basically import a lot from you only, and I'm not going to import from China because I want you to strengthen against China. I don't think this is anywhere, close to that sort of an arrangement.
What are some of these goods that the US, you believe, would be, rushing to sell into India, which it wasn't so far on account of higher tariffs? What could those categories, sectors be, and what could the quantum of that be?
Yeah, so, I mean, if you were to just look at the broader things that US would do, of course, it will be broadly things like energy, right? They would want to sell their energy products into India, which is basically crude as well as other energy value chain. That's one pet project. The second thing is, I guess, agri side, they would be probably wanting to make some pathways into India from a point of view being able to sell certain things to India. Now, how much of that is a part of treaty we need to see, because I guess India would also resist and not open it up completely. But that's the second area, which is very critical for US. The third thing is, of course, broader electronic products and things we've been anyways importing from the US that will probably continue and go up. Quantum wise, US wants us to import a lot of defense products. And remember, this is a very critical and a very interesting situation right now, is that when it comes to India's own defense complex, we are pretty much embedded with the Russian value chain. Now, if we are being asked to stop procuring oil from Russia, what will happen if we announce 10 days later that we're going to be buying $5 billion of Russian defense products? So will this treaty hold good at the point of time? So it means that it is not just about oil, in my view. India has to rethink their entire defense arrangements as well. It's a pretty big call that India needs to take. So defense is another area. They would want to push auto and auto components into India. But look, the reality is that I really don't think, pricing wise, it's going to be material enough to really move the needle, because they'll be super premium in terms of pricing. And auto products really need distribution value chains in India, which are not existing for US companies. So I wouldn't really be bothered about that. But bringing down a duty is a great thing, because anyways, they can't sell much into India, right? So these are the broader areas that I would sort of broadly classify.
Yeah, which is what I would imagine as well, because, the things that US definitely wants to send to India are some of its consumer products and some of its consumer brands, along with retail brands as well, and agri products. We don't know whether that's part of the treaty or not, or whether that will ever be part of the treaty or not. But Nigel.
Well, Venu, good morning. Good to see you, Vin. What about the other big event? Budget 2026. We had spoken before that, and I recall you telling us that you wouldn't mind a little bit of a slip on the fiscal deficit. They have stuck to that, actually. They're holding at, the guided path. Capex spend was, I think, as good as what you were working with, and defense spend as well, pretty much in line. You were telling us that defense spend should be that 15-18%, I think, so which has come about. However, the sentiment negative was that increase in STT. Put everything together, how would you rate this budget? The revenue estimates actually are pretty realistic. So your take.
I broadly gave a title calling it as an academic budget. And I didn't want to call it as a bad budget, because my original thinking was that there is very little policy flexibility the government has at this juncture. They need to juggle next year or the year after even wage revision. So there isn't much they can do unless they increase fiscal deficit from 4.4 or keep the fiscal deficit intact, right? So I was at the camp that theoretically government should look at increasing deficit or keeping the deficit. Of course, they cut down the deficit a bit to ensure that bond markets are in shape and currency doesn't get impacted, and people view us, as a bit more careful as a country with respect to debt and things like that, right? So we have followed the script in a pretty nice way. All metrics that you see from an annual perspective, from capex, which is actually 9%, on the previous budget and 12% on the revised budget, or subsidies which are growing, which pretty much could have been contained, but nevertheless they gave some bit to everything, is the way I put it. See, the thing is, a lot of things announced in the budget with respect to tax ops around, let's say, data centers or things like allocations for semiconductors. These are all, interesting but pretty long drawn in nature. So don't expect anything to materially transform or impact the economy in the next 12 months or 24 months, right? So allocations also were not there for a lot of these new initiatives. So I'll put those things aside, but it's a slightly more longer term budget in terms of how they want to reshape the economy and sort of give benefits to newer areas. So neutralish, I would probably say, doesn't really impact the economy this year incrementally positively.
Right. Venu, and 28,100 target, right? By the end of this year, calendar year.
Yeah, see, my target doesn't change. I still say neutral on India with the 28,100 target, but the only difference is the market did fall in January, right? So that increased my return expectations without changing the target from 7.5% to something like 11-12%. So the idea for me is that I'm broadly expecting the market to retrace back to 26,000 plus, which is 4-5% return, which is a short-term rebound, which we wrote in a report yesterday post the US trade treaty, and that's basically where we are at this juncture.
Venu, thank you very much for joining us. Great speaking with you. It's a pleasure. And we'll look forward to our next chat. We take a break. We're back. The Castrol management on the other side with us to talk about their quarterly numbers and the outlook ahead. Stay tuned.
Welcome back. The stock that's been doing well over the last couple of trading sessions is Eternal. After a big decline that it saw post its results and the management change, we've actually seen the stock claw back some of those losses. So from its 52-week low, we've seen a decent pullback. Over the last, I think, 3 or 4 sessions, the stock is up around 7 to 8%, currently at 283. But let's focus on Castrol India. The company reported a decent set of numbers that came in. Revenues were up 6%, EBITDA was down. And, the margins also were at around that 25.5% mark too. The net profit impacted by the labor code by about 22 odd crores. The new MD, the new leader of the company joins us now, Saugata Basu. Thanks a lot, Saugata, for joining in. Congratulations on your elevation and appointment. And this also comes at a time when there is so much uncertainty around what takes place at the globe, right? Because the deal of the parent has been done. And what we understand is that Stonepeak in the past, whatever sort of acquisitions that it has made, it's gone ahead and delisted those entities. And that was one of those reasons why, as soon as the deal was announced, the next couple of days, the street was betting on something like that to perhaps happen at Castrol India as well. Whether that happens or not, there is uncertainty. But what have you heard of the change that has taken place?
Hi, good morning, and thank you for having me. Let me first address our fourth quarter numbers, if that's all right, and then I'll respond to your question. First of all, I'm very pleased to say that it has been 8th straight quarter of volume growth, and volume growth ahead of the market, which has resulted in share gain. And this has come on the back of us as company executing the strategy that we had signaled earlier. We are building out our business in terms of reach into rural India in a big way. We are scaling up our industrial business. And we have had a lot of product innovations we've introduced through the year, which has enabled the core business to grow. And we are quite pleased with the results that we have seen at the end of the year. You are right in terms of the EBITDA margin. We had signaled that our EBITDA will be in the range of 21 to 24%. We actually come ahead of that. We are up beyond 25. There are some one-time charges in quarter 4, but overall, I would like to reassure that the quarter 4 operating parameter of the business remain very strong. Strong balance sheet, very strong cash flow, which allows us as a business to respond to the environment very proactively. Stonepeak announcement has happened. It's a deal that is subject to closure, which has various regulatory things that will happen. As and when that closes, I think as a shareholder, they would announce whatever is next down the cards. But in the business at Castrol in India, we remain focused on executing our strategy, which is to go big into rural, scale up the industrial business. And we're also seeding in our services business.
Okay, all right, Saugata. But have you heard any kind of inkling whether or not there will be some action for the Indian entity. There's always that buzz, right? I've heard it for many, many years, actually. But now there's this fresh news that's come in.
No, we are not involved in those conversations. As an operating team, we are focused on our business.
So let's focus on business then, Saugata. As you indicated, we'll focus on that. Now, volume growth, I think, was close to around 88%. For this year, what kind of a volume growth are you looking at? And also, if you could help us out with how much contribution comes in from EV fluid sales. How much is it and where is it headed?
Right. So look, I think for the volume growth, to talk about volume growth, one has to look at the perspective of the market. Our estimate is the market is slated to grow anywhere between 3.5% to 4.5%.
Got it.
What we aim for is to grow the top line, volume-driven top line of this business at 1.5 to 2 times of the market.
Got it.
And through that, therefore, gain share. And we are doing that by going deep into rural India because different parts of the country are growing at different rates. Different segments are growing at different rates. Our strategy is focused on tapping onto those opportunities and build the business to get, track growth as and when the market opens up. So that's what we are doing. To your second question on EVs, it's a growing part of the business, but small. Yeah, but we are positioned to take advantage as and when the market expands. In two-wheelers, for example, less than around 10% of new sales is EVs. In cars, it's less than that. But we have got good partnerships with most of the OEMs, and we have products in the market which are ready to be distributed as and when there's demand for that.
All right. So 3.5 to 4% is what the market is expected to grow. With your 1.5 to 2 times, you expect to grow between 6 to 8%. That's the inference that the street makes. EVs, yes, it is small in the overall scheme of things as well for the industry right now, notwithstanding the chatter around that. But industrial segment, you said that that's about 12 to 15% of your business, and you expect it to grow over a period of time. If you could give us a sense on what sort of targets you've earmarked yourself for the industrial business.
So I'm very pleased to say that the industrial business grew double-digit last year. Okay, and that contributed to that 8% growth that you have picked up. We maintain that kind of guidance, which will be ahead of the average growth rate of the market. And because it's a smallish part of our business, it will grow much faster than the core business. We are focused on executing a strategy which is about growing into segments such as aerospace, cement, steel, where typically we had been underrepresented. And we have a team which is today going around the country, introducing Castrol to customers in this segment, because that's what Castrol has not traditionally been associated with. And we have seen success on that front.
So do you think the industrial business grows 2x of your core growth, which itself will be 1.5 to 2x of the industry growth?
So that's the kind of range that the industrial business has been delivering. And I expect the industrial business to sustain that level of growth.
Got that.
Okay, all right. Saugata, you've also indicated that, you are developing products for the data center business. Are you in talks with hyperscalers, other big clients as well globally? Give us some color on this particular aspect.
You're right. And thank you for the question. Yes, we are in talks. And some of these are global accounts. As you can imagine, hyperscalers are businesses that set up data centers across the world. And there are trials that are happening in India. The trials are happening in different parts of the world. We are also putting innovation in those products and working through on what would be the next cycle of products that will enter into the market. So very much engaged. Again, a small part of our business and a small opportunity today, but positioning us for growth into the future.
From a data center standpoint, what proportion of their, BOM would be the product that you sell? We just want to understand, because by and large, the opportunity is huge. Everyone talks about that. But what kind of value chain benefit would accrue to players like you?
Look, early days to estimate that, because the technology itself is evolving quite a bit. Yeah, and there are different kind of cooling technologies in play. Their core business is not about manufacturing and producing something. So it's really about serving the requirement of removing heat so that the data centers operate at a high degree of efficiency. And we have got products which enable that particular outcome.
All right. Take that point. Thank you so much, Saugata, for joining in and giving us, your business outlook for the near term, though the street will also await what takes place in, the global parentage, the change that happens, and to the stock by and large. So that's the management, Nigel, of, Castrol. From a car engine oil maker, let's go to a car maker.
Well, that's right. Hyundai Motor India. That's the next management on the show. Remember, the auto major reported a mixed set of numbers. The revenue growth came in healthy, but margins did miss, and volumes have largely been flattish. We have with us Mr. Tarun Garg, the MD and CEO of Hyundai Motor India, who joins us on the show. Hi, Mr. Garg. Always a pleasure having you on the show. Well, in January, the volumes rose by close to 12%, with the highest ever monthly sales. Could you tell us how is Q4 shaping up so far?
I think it's a very, very positive sign, and we can see positive momentum everywhere. Thanks to GST 2.0, we saw October to December quarter also a lot of retail momentum. And what happened was, because we were able to make space in the network inventory, so January also started on a very positive note. And we are seeing a growth across segments. For example, Aura clocked the highest ever sales. The new Venue has received a great response, almost 80,000 bookings and the highest ever sales again. Creta continues to be very strong. So I think we can be much more positive about Q4. I don't really like to put a number to it, but as things stand now, the momentum seems to be very strong.
Right, Tarun, but most brokerages, they've raised their PV industry outlook, especially post the recent volume up move that has happened. What's your own estimate for the industry, not particularly for you? What's your own estimate for FY27?
In fact, now we are already at the end of FY26, and it's better to talk about even FY27. And we had a SIAM conclave where all the auto OEMs were present, and consensus was about 5 to 6% growth for the industry. I'm sure as Hyundai will like to beat that. And like I said, the year has started, the calendar year has started on a very positive note. And we believe that because the growth is everywhere and the maximum growth is coming in the compact SUV segment, where the new Venue has received a great response. And we are looking at avenues to increase the production further because we have a great backlog of orders. So I think we can really sustain this kind of momentum going forward in fiscal 26-27 also. And as we already announced in the Investor Day, our new model cycle has already kicked in with the Venue, and more models will come in. I think all that should help us to carry this momentum to the next fiscal.
Mr. Garg, you reported an increase in realization of around 3%. I assume you've taken a price hike. If you could give me some clarity on that particular aspect.
So yes, actually, if you see the last quarter, because in January 25, we had a price increase of about 0.7%. And obviously that effect has helped until December, October to December quarter. And obviously we had some very strong cost optimization measures. Yeah, as you know, we have a very strong quality of growth strategy. Even post GST, we were very disciplined in our discount levels. Which remained less than 3%. So all in all, I think all these factors have helped us to kind of have a growth in EBITDA margins and a growth in top line as well as in bottom line. Exports also helped. We had a 21% growth in exports growth in the last quarter on a year-on-year basis. And I think export continues to be a very strong pillar in HMI's quest for volume and profitability.
Since you spoke about profitability, let's talk about the margins. So will it stay around this 11.2, 11.3% sort of band despite commodity inflation?
So look, we have already, during our Investor Day, we have already given a guidance that our EBITDA margins will stay between 11 to 14%. And we are fairly confident to meet those expectations going forward as well.
Mr. Garg, is there another price hike on the anvil?
So look, we don't want to do price hikes, and we always try to do cost optimization. So we'll watch the commodity prices, we'll see what are the pressures there, and we'll take a decision as and when required. But obviously the endeavor is always to avoid price hikes as much as possible and to do cost optimization and all the other measures, in terms of saving cost or localization or the trim strategy, the quality of sales strategy. So I think that will continue to be our endeavor going forward as well, unless it becomes imperative to pass on some of the, cost to the customers. But let's see. I mean, we will watch the commodity prices. The volatility is so high. You have seen how things are moving, especially precious metals and all. So I think we need to have a close watch on that.
Okay, all right, Mr. Garg, exports has been a growth driver, and you've briefly mentioned about it in the past. Could you tell us what's the strategy with regard to exports from here on?
So look, I think as you know, that now we have a headroom because of the additional capacity in the Pune plant, and so we have accelerated on the exports. We are HMC's hub outside of Korea for the emerging markets. The new venue is produced exclusively in India. I think this will present some really new opportunities for us. Middle East is doing very well in exports, Latin America as well. Now, so far, of course, Exter, it was only RSD. Going forward, we will see in case we can have the LSD, and which can again help us, going forward in terms of increasing exports. New model cycle is kicking in. So we look at all those models also, helping us in exports. And in the midterm, all these FTAs are also very exciting, and we still need to go through the details, India, EU, whether there is any opportunity there. So I think we'll be very, very open and positive. I think the demographics of India and a very strong structure for our plants and a very high level of quality puts us in a very, very good position to continuously look for opportunities for increasing exports. And Hyundai has been very strong in India in terms of exporting. Since the time we set foot in India, on a cumulative basis, we still hold the position of being the #1 exporter. And I think last 12 to 15 months, the exports have been a great driver. Already we have announced that from the current level of 23 to 24% contribution of exports to the overall production, we intend to go to 30%. So the plans are very much intact, and we are fairly confident that exports will only go up from here.
All right, since you spoke about increased capacity and that helping your exports, could you tell us what your current capacity utilization is, and when do you get to this 30% contribution coming in from exports?
So if you see the current capacity is now almost 824 in Chennai and 170,000 in Pune. So 994,000 is our capacity. So we have enough capacity now. And that 30% is, of course, for fiscal 30. So that is a long-term plan to reach 30%. Current level is about 23 to 24%. And so this is where we are.
Mr. Gargan, lastly, could you talk to us about the strategy behind the foray into commercial mobility segment, sir? I mean, what are you literally driving at here? What's the aim?
So I think this is a very interesting segment, and we have seen the segment really grow, especially post-COVID in the last 3 to 4 years when people are looking for shared mobility. So I think Hyundai, with a strong brand and very strong product, along with the CNG, factory-fitted CNG option, both in the hatch as well as in the sedan segment. So we've introduced it in January. The initial response is very, very encouraging. Like I mentioned earlier, especially in the sedan segment, that has helped us to have clocked the highest ever Aura sales, and all across, because the products are very reliable, and we have had a very comprehensive strategy. It's not only about the product. Our dealers are ready. We are tying up with the financiers. The service packages are there to give a comfort to the operators. So we are fairly confident that we will be able to make a very strong mark in this segment where the competition is not very strong, and very few players, have a right product to tap this kind of a taxi segment.
Thanks a lot, Mr. Garg. Always a pleasure having you on the show. Wishing you all the best for the fourth quarter, and we look forward to chatting up with you rather soon. Well, before we go to Nagaraj Sethi, let's get a quick check on the IT index. That's down more than 5% in today's trading session. But I'll tell you what, from the frontline names itself, there is some kind of bottom fishing that we're seeing from the lows. If you pull up Tech Mahindra, HCL Tech, and even Wipro, all of them have come off close to around 1.5% from the low point of the day. So there is some kind of recovery from the lows. They were down close to around 6% or thereabouts. There is some kind of recovery over there. The problem is it's not replicated in the IT index because the largest weight, which is Infosys, that's actually taken a leg down. That's down more than 6% now. So hopefully that one as well sees some kind of recovery. Then we'll see that reflecting in the IT index. For the time being, down 5.5%. Let's get in Nagaraj Sethi, Senior Technical Analyst at HDFC Securities, who joins us on the show. Hi, Nagaraj. Good morning. Good to see you. First, your view on the tech index. Where are we headed from here? Are we at crucial support levels, or do you think we can move deeper from here?
Hi, Nigel. Good morning. The IT index, surprisingly, it was moving. IT sector was moving. That news came down sharply. The overall picture is showing some sign of tiredness at the higher levels. The way it has declined, I think some more weakness is likely. I'm not expecting a big decline from here onwards. but some more consolidation, some more weakness is likely in the near term before showing bounce back from the lower levels.
Nagaraj, what would you do in terms of specific stocks?
Yeah, I have for Nifty, if I speak a couple of seconds for Nifty, now way the Nifty has reacted from the lower levels, it indicates that 24,550, the eventful budget day, that is going to be an important bottom reversal. And the way it has formed a gap of around 400, 450, 500 points gap, which is still open, upside gap, is indicating that there is a higher possibility of Nifty moving ahead. Around 26,000 is going to be the initial resistance, initial target, and eventually Nifty could reach up to 26,300, 350, which is ultimately the upside target for the market. And I have two stocks from the long side. First one is MRPL. This refinery stock has been in an amazing run over the last couple of weeks. We have seen continuous up run, higher tops and higher bottoms. After a smaller dip in last session, it has bounced back very well. Currently trading around 188. I'm expecting this to move further. One can look to buy around this market rate around 187.70, 188. Upside target would be around 200, and one can place a stop loss at 182. And in the second one is the Rain Industries. The chartically Rain Industries has been in a sharp uptrend recently after a small consolidation, currently placed at the edge of a decisive upside breakout. Now trading around 166.50, one can look to buy at this point of time. Immediate target of around 166, 176, and one can place a stop loss at 160.
Okay, all right. Thank you very much, Nagaraj, for that. Appreciate it very much. Well, after the India-US deal announced yesterday, US Trade Representative Jamieson Greer spoke exclusively to CNBC. He says India is going to cut tariffs on a vast variety of goods, agri included in some cases, to 0%. He added that they will basically finish the paperwork on the deal soon. Listen in.
Remember April of last year on Liberation Day, and then we remember the announcement of all the trade deals as they would come, and we'd be waiting and waiting. We were always waiting, it seemed, and some of the other president's men, Howard Lutnick and others, would talk about India and whether we were getting close with India. Is this that same deal that we were talking about the entire time finally coming to fruition, Mr. Ambassador?
Yes, this is it. The time has come, and now we have the deal. We'll finish papering it, but we know the specifics, we know the details. It's a very exciting opportunity. On the one hand, we'll continue to maintain some level of tariff against India, 18%, because we have this giant trade deficit with them. But they've also agreed to reduce their tariffs for us on a variety of agricultural products, manufactured goods, chemicals, medical devices, et cetera. It's an exciting opportunity for both countries.
Because I remember, Jameson, that we got things done with certain countries where we thought it wasn't that egregious the way we were being treated. There was a notion that India was one of the worst actors in terms of protectionism for their own stuff and tariffs. Is everything going to zero? It sounds too good to be true. That's kind of what the president indicated, and we're staying at 18 for what we tariff Indian goods. Is that really what the trade deal stipulates?
So with India, right now, today, for industrial goods, their average tariff is about 13.5%. That's going to go to zero for virtually everything. When I say virtually, I mean 98, 99%. On the agricultural side, there's a vast array of agricultural goods that will go to zero. India, like every country in the world, including the United States, had some protection around some certain key areas. Well, they'll continue to control that, and we'll continue to work on access. But for a variety of things, tree nuts, wine, spirits, fruits, vegetables, etc., they're going down to zero.
But
so this is a big win.
And you got the oil concession, which it just seems like a lot of things. The non-trade barriers are being significantly reduced by India as well?
Yes, the non-tariff barriers, as you know, Joe, if you get rid of a tariff, that's one thing, but often the non-tariff barriers pose problems. So we have an understanding and agreement with the Indians as well on a variety of technical barriers to trade, areas where they have not accepted U.S. standards. We know American goods are safe. We know they're effective, et cetera. We have effective regulation in the U.S., sometimes too effective. So we have an agreement with them on a process for recognizing certain U.S. standards. They obviously have their own political considerations and they have their own processes for accepting those standards, but that's a key portion of this trade agreement that should open up this market of over 1 billion people to U.S. goods.
How much are we talking about in terms of displacing Russian oil for use by India? How does that work exactly? And some of it could be Venezuelan that they would get from us, some of the 50 million barrels that the president talks about all the time?
That's right. So remember, India, prior to 2022, 2023, really didn't import Russian crude. Right. They took advantage of a situation where Russian crude was trading at a discount because they couldn't get it to any other countries because of sanctions. President Trump very accurately put the Indians on notice that we viewed this as supporting the Russian war effort. And starting early, at the end of last year, the Indians started winding down their purchase of Russian oil. We've been monitoring that. They've been diversifying purchases of energy from the U.S., not just oil, but also gas, propane, other things. That's been going up. We'll keep monitoring that. Obviously, they want to diversify from other sources too, whether it's Venezuela or the Gulf, et cetera. There are a lot of opportunities to do this. The Indians are making the right choice.
All right, interesting conversation there. What we'll do is take a short break with the news that the market's doing well, actually. The Nifty Bank is perked up. It's currently at the high point of trade along with the Nifty, which is moving towards that 25,800 mark. On the other side, Manisha Gupta puts the focus on all things commodities. Stay with us.
Welcome back. Equity markets in a good space. Actually, we're up close to around 170 points from the low point of the day in the Nifty itself, and the Nifty Bank is the one that's doing the heavy lifting. But let's take a break from equities. Let's go across to the commodity markets. Manisha Gupta joining to tell us what's going on there. Manisha, take it away.
Well, yes, I'm back to precious metals because we are looking at very, very strong gains coming in for this one. Take a look at the gold prices. It really seems to be making record numbers on the downside and on the upside as well. So overnight, we've seen 6% of gains come in. It's trading back above $5,050 an ounce. And this is the biggest single-day gain that gold prices are putting forth since 2008 there. Well, a couple of geopolitical reasons, really, for the gold prices to be coming like that. It is about U.S. forces downing an Iran drone in the Arabian Sea. And there also are reports that the Iranian vessels have challenged a U.S.-flagged oil tanker transitioning in Strait of Hormuz. Now, even as U.S. and Iran are slated to have a conversation on Friday, this does not augur well and is adding some geopolitical premium in case of gold prices. Anyways, with the kind of sell-off that we saw in 2 or 3 trading sessions, there is some opportunity buying as well coming in on the lower side for the gold prices. And then it is about the strong demand estimates, which are also supportive. 2025 has seen the best gold demand ever in any year. $5,000, 5,000 ounces is what we've seen in sense of demand coming into the markets there. If you look at the year-on-year number in sense of that, we are looking at very strong numbers on ETFs. Those holdings grew by 801 tons. This is the second highest year on record in sense of ETF buying in case of gold as well. With the kind of numbers and with the kind of run-up that we saw in gold prices, all of this demand stands quite strong. So bars and coins, that demand continued on the stronger side, the highest in 12 years in 2025. The central bank buying, which has been hitting 1,000 tons in last 3 years, also saw a buying at 863 tons. So the higher side of range coming in for this one as well. But the overall demand is the number that you should be looking at. 5,000 tons in 2025 is an all-time high that gold has seen in sense of demand ever. 2024 was 4961, 2023 at 4944, 4961. So we've seen constant gains continuing into those markets there, as you can see on a year-on-year basis, and 5,002 tons is a record high in sense of demand there. Interestingly, even with the kind of volatile moves that we have seen in case of gold and wherever the prices stand right now, it is the $6,000 an ounce forecast club that really seems to be buzzing right now. In the last week or so, even as the gold prices have been very volatile, you have seen a report come in from JP Morgan talking about $6,300 an ounce of a possibility by the time this year ends. Deutsche Bank, in a report yesterday, talks about 6,000. Bank of America is talking about $6,000 an ounce by the time it is spring season. UBS has put out a number of $6,200 an ounce. Jefferies, 6,600. You have your Adani Group putting out $6,000 an ounce. So that's a 6,000 club, really. They believe that all-time highs are yet to come in, and this year could be looking at gold prices at higher highs before the year ends.
All right, Manisha, thanks a lot for that. Higher highs before the year ends. That's on the precious metal space. But meanwhile, don't lose sight of the market. 25,800 on the frontline index. A lot of these oil players doing extremely well as well. ONGC, obviously, Reliance is a play out there. Big weight on the index, and Oil India spiking. With that, we'll take a short break, come back on the other side. Lata speaks to the Citizens Monetary Policy Committee, CNBC-TV18 Citizens MPC, to discuss the roadmap ahead for the RBI and how the macros have changed after the India-US trade deal. Stay with us.